Picture this. You've been paying your insurance premium every single month for 3 years. $350 a month like clockwork, never missed a payment. You've given them $12,600 of your hard-earned money. Then one day, you're in a car accident. Not your fault. You need surgery. Your medical bills hit $47,000. You file a claim, confident they'll cover you because that's literally what insurance is supposed to do. Instead, you get a letter. Claim denied. Missing documentation. You call. They need Form 2847B. You send it. 2 weeks later, another letter. Claim under review, awaiting additional information. You call again. Different person. They've never heard of Form 2847B. They need something else. A month passes. Another letter. Claim denied. Pre-existing condition. You never had a pre-existing condition. You appeal. Silence. You call every week. Transferred. Put on hold. Disconnected. 3 months in, you're drowning in medical debt. Collections is calling. Your credit score is tanking. Finally, they make you an offer. $11,000. Take it or leave it. That's 23% of what you're owed. And you're so exhausted, so desperate, you consider signing. What if I told you that exhaustion was the plan all along? What if I told you that insurers don't deny claims because they're disorganized or making mistakes? What if I told you that denial by design is the actual business model, and every delay, every missing document, every lowball offer is a calculated strategy to wear you down until you either give up or accept pennies on the dollar? My name is Eddie. Today, we're not talking about budgets or investment tips. We're talking about one of the most profitable scams in America, an industry that collected over $1 trillion in premiums in 2024, made $71.3 billion in profits, and systematically denies 19% of all claims, knowing fewer than 0.2% of people will ever fight back. We're talking about insurance denial by design, and once you see how the machine works, you'll never look at your insurance policy the same way again. If you've ever had a claim denied, delayed, or lowballed, if you've ever felt like your insurance company was actively working against you, or if you're paying premiums every month and wondering what you're actually buying, hit that subscribe button, because today I'm going to show you the mathematical proof that your insurance company profits more when they don't pay you, and the system is designed to make sure as few people as possible ever collect. Here's the scam. You're sold insurance as peace of mind, protection, security, but here's what they don't put in the commercials. 19.1% of all in-network ACA health insurance claims were denied in 2024. Read that again. Nearly 1 in 5 claims that should have been covered gets rejected. Approximately 8.8 million of 46 million in-network claims were denied across the country in 2024 alone. That's 8.8 million times an insurance company said no to someone who paid them for protection. And this isn't just health insurance. An estimated 10 to 20% of life insurance claims face an initial rejection or delay. 41% of healthcare providers say at least 1 in 10 of their claims gets denied. Initial denial rates hit 11.8% in 2024, up from 10.2% earlier. Claim denials have increased 16% from 2018 to 2024. This isn't getting better, it's getting worse. And it's not random, it's engineered. Look at the denial rates by company. Oscar Health denied 25.3% of claims. Molina Healthcare denied 22%. But here's the kicker. UnitedHealthcare denies nearly 1 in 3 claims, about 33%. Think about that. You pay UnitedHealthcare every month. When you file a claim, you have a 1 in 3 chance they'll say no. That's not insurance. That's a gamble. And the house always wins. Now let's talk about why this happens. Follow the money. The 7 largest publicly traded U.S. health insurance companies reported a combined $71.3 billion in profits for 2024. Since the Affordable Care Act passed in 2010, America's 5 largest health insurers have raked in more than $371 billion in profits. More than 40% of that went to UnitedHealth Group, whose annual profits have skyrocketed by nearly 400%. Property and casualty insurers, overall premiums collected totaled more than $1 trillion per year for the first time in 2024. The U.S. property and casualty insurance industry posted more than $100 billion in net income for 2024. These are record profits in a year where they denied millions of claims. How do you make $71 billion in profit? You collect premiums from everyone and pay claims to as few people as possible. Every claim you deny is money you keep. Every claim you delay earns you investment income while you hold on to the payout. Every lowball settlement you convince someone to take is money that stays on your balance sheet. This isn't a conspiracy theory. This is accounting. The less they pay you, the more they profit. It's that simple. Let's walk through this system, step by step. This is how they wear you down. Stage 1, the initial denial. 34% of denials fall under Other, an unspecified catch-all that gives insurers maximum flexibility and patients minimum clarity. Think about that. Over a third of all denials don't even have a real reason. They just say no and hope you go away. 18% of denials are for administrative issues, coding errors, missing information, duplicate claims, technical problems that have nothing to do with whether your claim is valid. Here's the beautiful part for the insurer. Consumers appealed less than 0.2% of denied claims in recent data, less than 0.2%. Out of 8.8 million denied claims, fewer than 18,000 people even tried to fight back. The rest just gave up. Mission accomplished. Stage 2, the paperwork loop. You don't give up. You appeal. Now they send you into the paperwork maze. We need Form X. You send Form X. We need documentation Y. You send documentation Y. We need clarification on Z. Each request buys them time. Each delay costs you money. You're paying interest on medical debt. You're missing work to gather documents. You're spending hours on hold. The average car insurance claim takes 30 days to settle, though more complex claims can take months. Home insurance claims can take weeks, months, or even years. There's no fixed timeline. They control the clock. Payers appear to be using initial denials to slow payments, even though they ultimately pay approximately 90% of claims. Read that carefully. They deny claims they know they're going to pay eventually. Why? Because delay is profit. Every day they don't pay you is a day they earn investment income on money that should be yours. Stage 3, the lowball offer. You've survived the paperwork loop. Months have passed. You're financially desperate. Then they make you an offer, but it's not for the full amount. Insurance companies will almost always make the lowest initial offer possible. The first offer typically represents the bare minimum the insurance company thinks someone in your position may accept. Your $47,000 claim? They offer $11,000. Take it or leave it. And here's the trap. Once you sign off on a settlement offer, you sign away your right to pursue further damages, even if you realize later that your actual damages were much higher. You can never go back. One signature and it's over. Why do they lowball? Insurance companies only make settlement offers when they believe it's more likely than not that they have at least some liability for your loss. They know they owe you. They're betting you're too tired to fight for what you're actually owed. And most of the time, they're right. Stage 4, the silent treatment. You reject the lowball offer. You demand fair payment. Suddenly, the calls stop. The emails stop. When you suddenly stop hearing from the insurance company, it could be a tactic to get you to accept a lowball offer. Silence creates anxiety when you have stacks of bills and no way to pay them. They want you to panic. They want you calling them, desperate, ready to accept anything. And when you do call, transferred, on hold, disconnected, start over. Denials related to questions of medical necessity and requests for more information increased by 5% and 5.4% respectively in 2024. More questions, more delays, more information requests. The strategy is simple. Make the process so painful that you'd rather eat the loss than keep fighting. Here's the most infuriating part of this entire system. Appeals work. When people fight back, they win. Internal appeals have a success rate of approximately 44%. Nearly half of all appeals succeed. 83.2% of Medicare Advantage prior authorization denials were either partially or fully overturned in 2022. More than half of denied claims, 54.3%, by payers are ultimately overturned. 44 to 60% of appealed denials are overturned depending on denial type. Let me repeat that. If you appeal, you have roughly a 50-50 shot at winning, sometimes better. Administrative denials have a 78% overturn rate. Not medically necessary denials have a 70% overturn rate. These are denials that should never have happened in the first place. The insurance company knew it. They denied you anyway, because they're betting you won't appeal. And they're usually right. Less than 0.2% of denied claims are appealed. Despite 44 to 82% success rates on appeals, less than 1% of denied claims are appealed, representing billions in foregone benefits consumers are entitled to receive. Billions, with a B. Money that people are legally owed, just sitting in insurance company bank accounts because people are too exhausted to fight. Why don't people appeal? 62% of physicians say they don't believe the appeal will be successful based on past experience. 48% say patient care cannot wait for the health plan to approve. 48% say they have insufficient practice staff time or resources. Even doctors who understand the system give up. Now imagine you, an ordinary person with no medical or legal training, trying to fight a billion-dollar corporation with an army of lawyers and adjusters whose job is to say no. Let's do the math on what this exhaustion game actually costs. Meet Jennifer. Jennifer is 34. She pays $412 a month for health insurance. That's $4,944 per year. She's been insured for 6 years, so she's paid $29,664 in premiums. She files a claim for $23,000 in medical expenses after a surgery. The insurance company denies it. She appeals. 3 months pass. She gets a lowball offer, $8,000. She's desperate. She takes it. Here's what Jennifer lost. She paid $29,664 and got back $8,000. She's net negative $21,664. But it gets worse. While the claim was denied, she put the $23,000 on credit cards at 22% interest. For 3 months, that's $1,265 in interest charges. She spent 40 hours on the phone, gathering documents, writing appeals. At her hourly wage of $28, that's $1,120 in lost time. Her stress led to missed work, another $1,500 in lost wages. Total cost to Jennifer, $25,549. She paid for insurance and still lost $25,549. Now scale that across America. Hospitals and health systems spent an estimated $19.7 billion in 2022 trying to overturn denied claims. That's just hospitals fighting denials. The burden of denied claims totals around $260 billion annually. That's $260 billion in administrative costs, lost time, delayed care, and financial stress created by a system designed to say no. And who pays for that? You, in higher premiums, in medical debt, in stress, in delayed treatment that makes conditions worse. Delays in receiving coverage for essential medications can worsen symptoms, increase costs, and add stress for patients. 19% of physicians say prior authorization resulted in a serious adverse event leading to a patient being hospitalized. 13% say it resulted in a life-threatening event. People are getting sicker. People are dying because insurance companies are playing the denial game. Think it can't get worse? It can. A lawsuit alleges that Cigna uses an AI-based claim review system that spends 1.2 seconds on each claim review, allowing the company to reject more than 300,000 claims in 2 months. 1.2 seconds. That's how long AI took to review your claim and decide your fate. The lawsuit references 2 instances where patients were sent home early because Cigna would not pay for the provider's recommended length of treatment. Both patients died shortly thereafter. This is the future insurers are building, algorithms trained to deny, software that can reject thousands of claims per hour. No human review, no consideration of your circumstances, just code optimized to minimize payout and maximize profit. And you're supposed to fight that with phone calls and paperwork? I know this is enraging. The system is rigged. You pay them to protect you, and they profit by refusing to pay. But here's what you need to understand. They're counting on you being too tired, too scared, too overwhelmed to fight back. Don't give them that satisfaction. Know your real odds. Before you accept any denial or lowball offer, understand this. 44% of internal appeals succeed, and external reviews have a 27% success rate. Administrative denials have a 78% overturn rate. If they denied you for missing paperwork or coding errors, you have a great chance of winning. Even not medically necessary denials get overturned 70% of the time. You can win this fight. Document everything. From day one, keep a file. Every policy document, every claim form, every denial letter, every phone call, date, time, name of person you spoke with, what they said, every email. This isn't paranoia, this is ammunition. When you appeal, you need proof that you followed their process and they're jerking you around. Never accept the first offer. Insurance companies will almost always make the lowest initial offer possible. That first offer, it's a test. They're seeing if you understand what you're owed. Reject it. Counter with the full amount you're owed plus interest for the delay. Force them to negotiate. Most people accept the first offer because they don't know they can say no. File your appeal in writing. Always submit your appeal in writing, even if you initially contact the company by phone. Phone calls disappear. Written appeals create a paper trail. Your letter should directly address the reason they denied you, include all supporting documentation, and demand full payment. Be specific, be firm, don't apologize. You paid for coverage, they owe you. Escalate immediately. If they deny your appeal, don't stop. Request an external review where independent medical experts, not your insurance company, will evaluate your case. File a complaint with your state insurance commissioner. Contact your state attorney general's office. Post on social media tagging the company. Make noise. Squeaky wheels get paid. Hire a lawyer for big claims. If your claim is over $10,000, hire a lawyer. Yes, they'll take a percentage, but insurance companies know that people who work with personal injury lawyers tend to receive higher settlements. A lawyer will get you more money than you'd get alone, even after their fee. For smaller claims, threaten to hire one. Mention that you're documenting everything for a potential bad faith lawsuit. Bad faith lawsuits terrify insurers because they can result in punitive damages, multiples of what they owe you. Understand the game they're playing. An insurer's goal is to drag out negotiations long enough to tire you down, all so that you will accept a lower offer. Knowing this is half the battle. When they delay, it's not incompetence. When they request the same document twice, it's not confusion, it's strategy. Don't let them exhaust you. Set a reminder to follow up every week. Make calling them part of your routine. You will outlast them. Let's bring this back to the concept of real cost. You think you're paying $412 a month for insurance, but here's what you're actually buying. You're buying the privilege of filing a claim that has a 19% chance of being denied outright. You're buying the right to spend dozens of hours fighting for payment. You're buying the stress of wondering if your claim will be approved. You're buying the risk of financial ruin even though you're insured. That's not insurance, that's a subscription to anxiety. Calculate your denial tax. Take your monthly premium and multiply it by your denial risk. Jennifer pays $412 monthly. Her denial risk is 19%. Her denial tax is $78 per month. Over the 6 years she's been insured, she's paid $5,616 in denial tax. That's the premium she paid for claims they'll refuse to honor. She's not buying security, she's funding the exhaustion machine. Now that you've watched this video, you're not exhausted anymore. You're angry. And you're armed with the numbers that prove the insurance firms could be scamming you. Calculate your denial tax, know your appeal odds, document everything, fight every denial, reject every lowball offer, and make them pay what they owe. If this video changed how you see your insurance company, hit subscribe, share this video with 3 people, drop a comment with your denial story. Let's build a community of people who refuse to be exhausted. Thanks for watching, and I'll see you in the next one.